Okay, Jeff Scott back. Sorry for that. I had to go and find the right file. So what I've put here under select HGSI warehouse file, this is a warehouse view of the entire market that I saved on January 1st of 2014. It's important if I'm going to make the argument how a box stock or a EPS rank or an ERG rank has performed, that I use data, that fundamentals that existed at the beginning of my test. So here's data from January 1st, and let's look at how the markets performed from January 1st to June 29th. And I need to also over here, save that, go to all securities, which is updated, and now I'm going to hit run, and we're going to let it run itself. And what this should show me is what's mattered in the market. So I look at my little dashboard here. It showed me, interestingly, if you take out the tail and the head, which I do because there's very few stocks here. For the main body, this is a weird year because ERG stocks have not outperformed. In fact, the low ERG stocks actually have outperformed the high ERG stocks. Now, I've looked over the last couple of weeks, and that seems to be reversing. EPS rank has made no difference this year. Interestingly, and opposite to what we expect to see, relative strength rank has not mattered. In fact, the least relative strength have had the highest performance. Just to set you straight, highest is to the right from a ranking, 0 to top for earnings per share. So this is very unusual, where typically both EPS and relative strength rank influence return to date. Now this probably explains this, where it looks like higher ERG did not matter. This is totally different, frankly, than what we saw in 2013. I think that's kind of interesting. In C, D, and E, you do not you show that those stocks that were neutral from accumulation distribution and those that were actually distributing at the end of 13 actually have outperformed. Box 7, my favorite box, has really outperformed a lot, but the boxes themselves don't look that exciting. Here's the non-boxes. So really boxes haven't seemed to matter this year either. Again, boxes are determined by earnings. So when I look at this, I scratch my head. Now, someone at the meeting pointed out, Jeff, it's obvious. It's obvious that the big money guys that really control everything, they must have decided that this was going to be a challenging market in 2014, and perhaps they sold their winners and bought boring things like REITs and utilities, which did not outperform in 2013, and that might explain this. I think there's a lot of truth to that. So I'm a big fan of the boxes, but this tells me that in 2014, boxes have not worked. But alas, that's not how I use the boxes. I use the boxes off of a bottom. So on the 14th, as I showed you, I went, or the 13th here, I built my box categories, and let's see how those boxes have done. I think this is pretty interesting. So if you look at, if you bought each of the box stocks on April 14th and sold them on June 27th, you bought $1,000 worth of each stock, and you bought them at the opening price and sold them on Friday at the close. No shocker, because it's usually the way we see it, box 1, 2, and box 7 were the leaders. So despite the fact that boxes may have not worked from the entire year, the way I use boxes is by buying box stocks at market turnarounds. And this was not even a huge turnaround it was a turnaround, but it wasn't like it was the end of a bear. But even after that little pullback, box 1, 2, and 7 were up over 15%. The S&P was up 7.85, and several of the boxes underperformed. So boxes still worked, especially our favorite groups, which is box 1, 2, and 7. And overall, box stocks were up 14% versus 7.85. So I think box stocks held true, which is you buy box stocks at time of a market bottom. It's not something that you use as your shopping list without looking at charts every other day. And mind you, these returns, of which predominantly winners versus losers, and double the return of the S&P and more, we're just buying all the stocks in the category and not selecting based upon charts. All right. So then I look quickly at Elder, get an idea of market forces. So I've got blue, green, green. So I have permission, if I filter whether I'm allowed to buy or not, I'm allowed to buy. I'm not allowed to be shorting up here. These red dots on the daily and here on the weekly show some MACD divergences. If you look at the histogram, we made new highs and barely broke above the zero line, which doesn't tell much positive about the underlying strength. So this is the S&P 500, looks tired but has not rolled over. If I look at the NASDAQ, green, green, blue, MACD divergences, same story, new highs, and have not at all broken the midline yet. A nice green candle after a long legged down. You could see what happened on Tuesday, closing near the bottom of the range. But a big move up the rest of the week, and the NASDAQ's out to recent year highs. NASDAQ is strong. The Dow Industrials, laggard, down in the middle of the channel, blue, blue, and blue. With everything blue, the buying or selling window can be open. There's not a lot of direction there. You could see the Dow spent 2 of the 5 days this week in red, and it too had some MACD divergences that are being worked out on the weekly. They still are there. If I look at the Russell, blue, green, blue, MACD divergences on the weekly. Kind of reminds me of some of the others. Curiosity, the semiconductors, you can see how they had MACD divergence here. And that's one thing to be aware. This is a scanner for potential MACD divergence. It doesn't necessarily mean it's actionable. And it had showed up as possible for 3 weeks before it rolled over. And you can see here on the weekly as well. So I see a lot of blues and greens, no active reds on the major indices. So that tells me that you could be buying here if you want to. Certainly no obvious sell sign. All right, let's open up HGSI. Let's go down to Woodward and Brown, their latest user group. I gotta kill the previous one. Let's go to top-down view, which is all technical, heavily weighted towards Friday in the last week. However, it does look at as far as 3 weeks out with the Force 13. If we look at sorting by raw combo, small stocks, mid caps, NASDAQ up at the top. That's why your portfolio did well if you're an HGSI investor. And down on the bottom are the dollar. Semis are weak. Big stocks are weak. Volatility had a good week and sold off half of their gain on Friday, which is why they're down here. Let's take a look at some of our favorites. Start with the S&P 500. Now I'm going to start in my traditional view here, just to show you that there's no volume here, but I'm just making sure there's no phoenixes or eurekas. So let's flip it into a plain old force. It's actually, I got to change this. No time better than now. It's an 8, 17, and a 50. This came up at my meeting. And now it says 8, 17, and 50. So it's an 8 exponential, 17, 50, and 200. You want to see the price above the 8 above the 17, 17 above the 50, 50 above the 200. Everything in an uptrend it is. It looks beautiful. It continues to go up. Eventually it's going to stop. And as we've talked about before, we've had a lot of modest little pullbacks and nothing that robust to the downside. And we're all agree we're overdue. NASDAQ broke out to recent highs. It's clearly not all-time highs because anybody who's got been in this long enough, realizes we've got a long ways to go to get up to this 5,100 or whatever that high was. Let's see, 5132. I guess that's the all-time high in the NASDAQ. We'll probably get there someday. That's going back to March 31st of 2000. But the NASDAQ is at a monthly high. It's, ever since it sold off, this is as high as it's gotten. You can't look at this and see a lot of much weakness there. So if I want to be bullish, I can be. I gave you a bunch of reasons beginning why I'm probably temperate. NYSE, kind of a wastebasket with all kinds of strange things like bond funds in it, but also lower left, upper right, a little bit off of its highs. If I look at the Russell 2000, not quite at its highs, but a big powerful move on Friday, closing at the high of the day. If I look at the Dow, Jones Industrials, clearly much weaker than the others with some hanging man days here. I think that this one's probably the most risk of all. Had a lot of volume on Friday. I think there was some rebalancing of indexes. Wouldn't expect Friday to have a massive volume day. The prior Friday was options expiration. That was explaining that bump there. If we look at gold and silver, they're sort of going sideways and they look the same. The good news is they're above the 500, the 500-day moving average, and now we're letting the moving averages catch up. We'll have the 17 crossing the 50, and soon maybe we'll see the 50 cross the 200, which will all be very supportive. But at best case, it's holding steady, treading water. You want to see the same thing. Here's silver, looks the same, not much more to say. The VIX continues to have struggles to substantially move. It did move up some this week. Look at this Thursday, up to the 50 and slap down. It's got to break above the 50 and then above the 200 for the VIX to go anywhere. VIX looks like it's headed down, at least for the first couple of days. And if I look at the dollar, $2 is headed down, failed the 50. We'll see if it takes out these lows. Dollar weakness, good for stock market, probably not good for the country. All right, I'm not going to go through the eye charts today. I'll look at one eye chart real quickly. These are charts that were put together by Ian and Ron. By going down to 0.2 broad market indexes, you now bring volume into indices that you didn't have it before because they're built by the underlying, so you can add the volume. And in the eye charts, what I want to just look at is a couple different things. And pretty much the main thing I want to look at is this chart here. And this shows that some of the heat that we saw 2 weeks ago, where we're starting to get a lot of stocks above the 20, 30, 50, and getting close to break even on number of stocks above the 200 versus their respective moving averages. That's flipped, and there's really not a lot of overheating in this market right here. Now, I don't know if we're going up or we're going down, but we're far from here where we pointed out that we're getting extended. So by buckets and also by this eye chart, it looks like we're at a point where the market's going to go whichever way it wants and not be forced one way or the other because of extended. If I look at 5-to-1 and 10-to-1 days, there were none. And if I look at accumulation distribution, my A's have turned up, my E's are down. Advanced decline line, up, down volume in blue is up. All right. On that note, let's now take a look at our industry groups. Go down to 05, and you can see we have 196. I don't want to give anything that looks at 3 weeks and picking one industry group's winning. So let's look at force up and down. So on the downside, you could see that we have 7 groups. And on the upside, I have 81 groups. So pretty certain that this thing is updated. Let's see. So my data is updated, perfect. Sorry about that, I just wanted to make sure that I don't steer you wrong. So you can get an idea of what's leading the way. It looks a lot like it did last week. Let's take a look at what we got here. Biotech. Seasonality is a good time for biotech. Let's take a look at the top. Let's go into my charts, and let me point out something that I've made a change in my chart. I've added on-balance volume down here, and this is on-balance volume, and this is the moving average. I'm pretty convinced after spending time listening to John Person, who's really an expert in this, that on-balance volume adds a lot to our picture. So those that are new, who are scared off by this chart, let me tell you what I got here real quickly. Bongo weekly and daily, these involve prices and RSI. In a uptrend, we expect the long term to be green. During pullbacks or retracement in a downtrend, the short term goes red. Then we have accumulation distribution. We have force 13 and force 2. I have my high jump bar. You can see we got up to the high jump here a couple days ago and given back some. DMI crossover. Then I've got my Bible gap ups, my squeeze, my MOBOs. In my pricing window, this is the group index, the dark gray. I've got some Bollinger Bands. And as always, I've got an 8-day exponential, a 17 in green somewhere. Should be a 17-day moving average in there. I guess it's this thing. The 50 in blue, the 200 in red. And then I have conventional volume, which has been a big help lately. So I've moved over to an on-balance volume here with my Eurekas and Phoenixes, and then my Kahunas on the bottom. So first thing we see is Vertex. I missed it, had a big move on data. Hard to chase this. It did have a Bible gap up. You could see the volume that flowed into this as on-balance volume moved up above its moving average. I don't chase, and that would be chasing. I still love Gilead. Gilead has had some challenges related to concern about pricing of its drug. As I pointed out, there are plenty of issues with drug pricing and the whole cost of healthcare. I also pointed out there's absolutely nothing in Obamacare to reduce the spend or cost of healthcare. And in 2003, Congress eliminated their ability to negotiate drug prices with pharma, so they can send nastygrams. Excuse me for saying this, but from an investor who cares if they can't do anything. Now, someday that will change. Right now, you've got a stock in a major bull run since middle of 2012. It stubbed its toes with its data down to the 50. That's on a weekly, so that would have been the 200, give or take. It bounced off of there here, and I think it goes higher. It's in a squeeze. Everything is green. It had a 5-day pocket pivot on on Friday. The thing holding back Gilead is overhang related to the pricing. Organova, that 3D printer, is in this printing biotech company where they're going to print new organs. I'm not a believer in the story, but everything is green. It had a MOBO breakout from a squeeze on Thursday and a Kahuna, big volume on Friday. You're buying it relatively cheap here. It's been as high as 13, 14 in the past. Might be something to consider playing with, not for me. Kyopharm Therapeutics, they announced what I think is veterinary drugs or drug for a cancer treatment for animals. I thought I read that it was for animals. Bottom line is data. They had a big move here, sort of a pennant formation. It looks like they might want to break out. Had a pocket pivot on Friday. On-balance volume is going up and had a MOBO breakout. So that looks interesting as well. Diax, I don't know from Adam, but a Kahuna off the 17 and the 8, out of a MOBO breakout from a squeeze one day earlier. Another biotech company, biological research. So biotech is hot right now. They've been hot for a while. Inovio is another small one, doesn't make money, moved above the 200. Let's see if there's anything here that I really should tell you about. Celgene had a 2-for-1 split, so it now looks cheap. When you look at MarketSmith, which looks at earnings differently and may not remove certain things that are removed by others from a gap perspective, the earnings look much better. But Celgene, like Gilead, pulled back earlier this spring, and it wants to run again, and it's in a nice uptrend. Medivation also looked good to me. Medivation ran up, giving you a little bit, sort of like a cup and a handle. Had a pocket pivot on Friday, kahuna on Thursday. Everything is green. Mobile breakout from a squeeze on Thursday. Great earnings per share growth. They've got a marketed product waiting for an FDA expansion of the label and a launch in first-line therapy. They've already had the label expansion. I know they've had great data. This is one to check out. They partner with Astellas. And another one that looks good is Grifols. And you can see Grifols. Grifols is a plasma producer, and I believe they're European. But you can see the major power move here, lower left, upper right from December 11th to date. Pull back near the 50. Looks like they may want to pop from here. This might be one to watch. Few comments on everybody's favorite, and I say that lightly, Mankind. Mankind got an approval on Friday, so let's just quickly go into CNBC. Take a look at the futures, not responding much to the negative Japan data. Kind of looks the same as it did earlier today. And let's just type in MNKD. And I know it traded up after hours on Friday after their approval. Last trade was 11, up a buck, so great for the Mankind followers. On one hand, this is really exciting because they have inhaled insulin, which got approved, and if you had diabetes and you had to give yourself a shot, this is the best thing you could ever imagine. The problem is the cost. That unless this is only nominally more than sub-Q insulin, which is the shots that people give, the managed care companies are likely to require big out-of-pockets to get access to this drug if they allow it at all. So having a nice drug doesn't matter if no one uses it. So they're going to be coming into a market where people are a little leery because of Gilead and their pricing. It'll be interesting to see. And according to the great and powerful Oz, also known as David Ghilardi of the biotech world, there are major logistic issues in the pharmacy around this product. So I'd say the jury's still out despite an approval. All right, right-click back. Next group to look at, exploration production, big shocker. They've been up here at the top for some time. Some of the little guys are here. This is Athlon. I call this a pullback, ready to run with a pocket pivot on Friday. Mobile breakout from a squeeze. Modest, tepid earnings per share growth going forward. Trades at a multiple of 47. I think it's expensive, and that bothers me a little bit. As I said, most of these are expensive. Oasis, similar chart pattern. Mobile breakout, everything's green. Trades at a multiple of 20, so it's a lot cheaper than the last one. Penn, Virginia, at least going sideways, breaking out above the 50. You see the group strength here. That one looks a little bit more interesting. These things have run a lot. This was one of the highlights last week. Lower left, upper right. But how do you buy this stock? Trades at a multiple of 24, and it's growing, as you could see, slowing down about the 20 range. A lot of well-behaved, of current moment stocks in here. I also own a little bit of Halcon. Again, same story. Seems expensive right now. So EP stocks continue to do well, but as I said in my opening comments, they're starting to look expensive. Banks, well, the best bank has been Wells Fargo. I also spotted the next one on my top-down review this weekend. Wells Fargo, pretty tight, lower left, upper right. Pull back for 3 days, had a pocket pivot on Friday. Looks like it wants to run again and a mobile breakout. The earnings per share growth is tepid. The debt dividend is 2.6%, multiple of 13. Right now, I think of the big banks, Wells Fargo is by far the best. Here's not a bad picture. This is a U.S. Bancorp, more of a regional play, although I guess Wells Fargo officially is that as well. National commercial banks, First Star Bank and U.S. Bank. I thought this pattern looked very nice as well. Pullback, cup, handle, pocket pivot, maybe it breaks out from here. You notice what's not up here, and what we haven't talked about are the big banks, the money center banks. Commercial finance. Yeah, I don't know these stocks at all, but some of these look kind of interesting. So here is ACAS. So this thing has been living on the 200-day moving average. If I was to buy this stock, where do you think I put my stop? Probably 50 cents below the 200-day moving average, which is right about where my PSAR dot is. Why might I buy that? Kahuna on Friday, big volume flowing in, pocket pivot, PSAR reversal, big up day, group strength, mobile breakout from a squeeze on Thursday, everything screen above. It's got some earnings per share growth coming in, does not pay a dividend. I'm interested in this. I'm going to do some research on it. Ares Capital, kind of a similar looking chart, but a deeper pullback below the 200. 8.6% dividend. 8.6% dividend, multiple of 10. No real earnings per share growth, so you wonder if they can keep their dividend going. Fifth Street Finance, breaking above the 200 on a Kahuna, big volume, everything is green, pays a 10.2% dividend. Remember I mentioned about the interest-sensitive stocks. Here's a weekly, way off of its all-time high. In fact, you're buying it near a low. Also did have a PSAR reversal. These are kind of interesting, to tell you the truth. So I spotted a couple of these on my review. I have to admit, I'm definitely interested in several of them, and we'll see if there's something here that I might want to take a flyer on. Apollo Investment Group, breaking above the 200, it pays, I think, a little bit, 9.3%. So something going on here in these commercial finance. Now, I own BX, which is not in this group, but is very similar, and I thought it was a lot like Apollo. Cable and Satellite Index. Several of these cable networks have been doing extremely well. Here's Liberty. Number of pocket pivots, huge volume on Friday. Looks like this thing wants to go much higher. Bouncing off the 50, I like that one a lot. My concern about it is it's got this pattern of small move ups and pullbacks, but this is in a place it looks like it wants to run. You see the group strength. Comcast, prettier chart because it's sort of been in a cup and a handle and breaking out here. Mobile breakout from a squeeze, everything is green. One to take a look at, on balance volume looks pretty good. Dish Network, I think with some of the discussions now about AT&T and DirecTV and the fate of the NFL ticket, you can see Dish Network with a couple pocket pivots is breaking out as well. So clearly some stuff of interest in here. This is what Top Down is. I'm going through the top 10 groups. Infrastructure software. We'll look at this one, and then we'll look at one of Gil's favorites, which is Palo Alto. Here's Microsoft, lower left, upper right. Everything is green, pocket pivots, big volume, tepid earnings per share growth. So it's gone from a growth stock to a value stock. Pays a dividend of 2.7. This has been a leader for some time. If you want to have some growth, a lot of people are looking at several of the others. Here's Palo Alto. Breaking out towards new highs, had a breakout on Thursday. Everything is green, a bunch of pocket pivots. This is one that I know Gil Morales likes a lot because he talks about it on his webinar. And whenever I get to reading his weekend update, I'm sure I'll see it there. Specialty pharmaceuticals, it's all about transactions. And I'll look at a couple of these. So Allergan is under attack. I guess it's an attack. It was 135 when the initial bid came in from Valiant, and there's been a subsequent bid, and now there's sort of a war between the boards. So Allergan, there's a lot of news coming across that suggests to me that they're going to find a way to get together. If this is the week, it'll go up to 185, which is about where the value is right now. Interestingly, in this world, the acquirer goes up as well. It popped when it put its bid in. It's been going sideways ever since. I just get the sense that Valiant's ready to break out. Look at the earnings per share growth here for a pharma company. Bongo Weekly is still red, which is bothersome. Money flow, which has been down, broke above the moving average and hit a trend line break this week. So it might be time to see Valiant make a move. Quest Core is already a takeout, so we're going to stop that. Pasura has been a great trade as well. I know my brother-in-law has been in this one, hopefully stayed in it. Not that exciting, frankly, company. It's more about delivery systems. But I think they've got a long-acting pain medicine. Big move here. Doesn't make any money, $90 stock, and has a market cap of $3.2 billion. That doesn't seem too bad. Other ones I wanted to point out. Horizon. I think Horizon's at a perfect time to look at to buy. Gil actually talked about on his website a little bit, and he's out of it now. I don't know if he's back in or not. Everything turned green. It's in a squeeze. Had a pocket pivot in a squeeze. I like to see a PSAR reversal. Look at the earnings per share starting to come into this. This is a box 7 from negative to positive. I think there's a lot of opportunity to make some money in this stock. I'm long it, hoping to see a breakout. If nothing else, you're buying it at a low-risk scenario where you could put your stop not much below the 17-day. The other one, Acorn did a transaction of late, and they look like they want to go higher as well, mostly green up here. It too makes decent money. So specialty pharmaceutical and biotech looking good. Internet media, let's right-click on that. Come on. Change index group. Facebook has just been a huge winner, and let's talk about a couple of these. So Facebook, it's not moving, it's not a fast mover by any means, but if you go from the low to the closing high, Facebook is up 24% in 2 months of trading. That's a pretty big move. And I think Facebook goes higher. I hope so. I got a big position. Everything is green. Had a bunch of pocket pivots last week and Kahuna, and you can see the direction of the group finally is up. Yahoo, not my favorite stock. I don't like Yahoo. Twitter is another one that I picked up. I actually was buying it before a certain individual who I think is very smart with the initials of GM and lives in California, goes by the name of Gil Morales, started talking about on his site, but breaking above the 50 here with some pocket pivots, mostly green up above. Interesting to see where this goes. I don't know how much rope I'm going to give it from a pullback perspective, but I'm long Twitter right now. And the other one that's been working has been Google. A lot of stuff going out, Google Phone, and some acquisitions. Be interesting to see what Google does. Everything is green. But I made some, at the time, crazy option plays, and I bought pretty much, right after I made that call to go long, I bought Google, Netflix, and Chipotle calls and made a nice return, 15% up since the bottom on Google alone. All right. Renewable energy, so PIX and GPRE have been leading now. It looks like Sun Edison is a solar. And there's been some interesting movement in solar, so I'm going to make a couple comments about it. This is the old wafer company. So everything is green, mobile breakout, breaking out to new highs on a pocket pivot, big volume. Looks good. I'm in a couple of chat rooms where this has been a hot one here. Sort of like a cup and a handle breaking out. These are ones that interest me a little bit. And I talked about CSIQ last week at my meeting and said, you know, it's pretty beaten up. But look at the earnings per share here. And if you look out on MarketSmith, out a couple of years, the next 2 years for Canadian Solar and Jinko Solar and SPWR are very interesting. So here is Canadian Solar, broke above the 200 this week, had a pocket pivot. It's been struggling. It's down a lot from its recent highs, but I took a position in there at the beginning of the week. I also have a position, as many people know, because it shows up on my TradeStation account, But I'm almost back to positive. That doesn't show today the value. Um, JKS also has had some big earnings and has some more earnings coming in. I guess the leader here has been SPWR, which I also have a position in, but its earnings are starting to slow down. Looks like it had a shooting star there, but a shooting star in a viable gap up, so not sure what I'm going to do with that puppy tomorrow, but I'll be watching that one. Big volume and a pocket pivot. So something going on in solar. And then lastly, communication equipment, change index group. I scratch my head on this guy. What do you do with Apple? I just don't know where growth is going to come from. You could see that it's not a big high growth earnings play. On the other hand, it's not a big multiple play and it pays a small dividend, so it's turned into a value stock. It's got 16 million shares short, but that's nothing when it trades 64 million on Friday. Yeah, it's an interesting place right here. It's a nice run up, pull back. Does it get to 100 or does it get back down to 85 first? If I saw a PSAR reversal, I might get interested, but I'm probably not playing Apple. Maybe I should. Looking at this list, a lot of beaten down stocks. Here's Riverbed, right around the 50. I'd rather play that. Two Kahunas off the 50, mostly green. It's got some earnings coming in. I find Riverbed a more interesting play in this group. And then I got a lot of things that look like this, just hammered. And are they coming back? Lots of pocket pivots and ruckus. I might be watching that one as well. Probably not buying it yet, but watching it. All right. I saw the next one. I usually stop at 10. But let's just quickly look at oil and gas services, because we've been talking about these like a broken record. And I looked, Schlumberger looks like it's getting away from us. Looks like it's going into a climax run, or breaking out to new highs. National Oil Varco doesn't look that hot. It looks great, but it's kind of loose. Here's Halliburton. Look at the earnings per share growth. It trades at a multiple of 22, pays a dinky dividend. I think it continues to run. I think it catches up closer to Schlumberger. And I continue to like Halliburton. The other one that looked interesting today, from a buy perspective, is Basic Energy, which has been basing at the 50 and broke out on Friday, turning green, had a bunch of kahunas this week, a pocket pivot on Friday. This one looks interesting here. Very quickly to the downside, just to see if there's anything that I need to look at. Retail drugstores, metals, we didn't talk any gold stocks. Gaming stocks ended up here as well. Let's see if there's anything in there that's, I scratch my head here. Is this bullish or bearish? Now, if that was a green bar, I'd say it's a bullish chart, breaking out above its 50-day moving average after a couple days of pocket pivots and kahunas. But it really looks like it wants to fall back and get below that. So I have my fingers crossed on this. I'll continue to watch it. The gaming stock that I'm in right now, and I got this from John Person in one of his presentations a couple weeks ago, is MGM, which also gave back some on Friday. But you can see it's well above the 200, multiple pocket pivots, and a kahuna on Thursday. So that concludes my top-down approach. And now what I like to do is I like to supplement it with a couple of other things, and we'll look at a couple other charts before I say goodnight. One thing I like to do is a group inclusion filter. So let's go into the smart groups, and let's just do one in here. So go Tools, Group Inclusion Report, and what I'm doing is trying to find what stocks make it into the most number of smart groups. Let's just look for 10 of them. Let's call it WebGems. Today is 6.29.2014. And let's, whoops, that was stupid. Let me try this again. Tools, Group Inclusion Report. forgot to check off what I want. So we want to bring this here and want to clear it. So let's go through the smart groups. So you can do this all on your own. Go to Goulardi, let's get the sprinters. Let's go to Woodward and Brown, and let's get best criteria, best of under 15, demand, erg, growth, HGS leaders, QEPs, shadow stocks, stocks and groups to the upside, big and small, strong EPS. Let's go into my group, and let's pull out, break out from a squeeze, and pull backs to the 50. Let's go into M&K's group, and let's pull out Bible gap ups. So each of these will have 25 stocks or so in them. And the hypothesis is, if my stock ends up in a lot of these groups, then that might suggest that that's a good stock. So I'm going to hit OK. I'm going to hit OK here. Yes. Do I want to index? No. And these are some of the stocks that come to the top. So let's look at these top 10. So if I go into my warehouse view and I go down to user groups and I find web gems, let's get the one that I actually worked on. Here it is. Let's go into scorecard, or take your filter off is fine. Here's my top 10. Let's look at them very quickly. Interestingly, we haven't seen many of these yet. We've seen a couple of them. So this is VIPS, lower left, upper right. PSAR flipped on Friday, Mobo breakout on Friday. Everything is green. This thing looks great until it doesn't anymore. So you got your cup, your handle, breaking out, leading stock, great growth, and it trades at a multiple of 142, which is high, but not when you're growing this fast. Lanet, this was my A trade from my meeting, the trade that I met my criteria. I bought it. I put my buy in here. I think I bought it over here, but pocket pivots galore, coming off the 50, and nice run up. Still looks good. Pull back here into a pocket pivot on Friday. Looks to me like it wants to go again potentially. Questor, buyout, beautiful chart, gone. Matador is another one of these expensive energy stocks. Not my favorite. My favorite is probably FANG. We did look at Pacira Pharmaceuticals. We did look at Facebook. Here's another energy stock. This one is not extended at all. Earnings per share seems like they're slowing down. Multiple is 16. This is SM, probably not my favorite. Here's a MLP, or natural gas transmission company. Which one is it? It's a midstream oil and natural gas transmission. Lower left, upper right, what a beautiful chart. It pays a dividend that keeps getting smaller, 2.4. Why is it smaller? Because it's almost doubled. It used to be closer to 4%. Certainly a leader. Gilead, we looked at. EOG, this is sort of the typical pattern we're seeing, breaking out to new highs on the EMPs. And if my favorite EMP has got to be FANG. And it's been that, we've talked about it for a long time, going sideways right now, pausing to refresh. But look at the massive earnings per share growth. It trades at a multiple that's 54, though it's a pretty expensive stock. So that's one way. And then lastly, some of the things that I do in finding stocks is I go into the all securities, and then I start looking at some of my favorite views. So one view that I like is, and it's in the groups that you'll be able to download soon, is I like to see things that are within 1% of free parking that had a kahuna. So let's look at the first 4 or 5 here. I don't think I liked any of these, to be honest with you. Public storage, I like the pattern going sideways at the 50, had a kahuna, pays a 3.3% dividend, but it's an expensive REIT. I'll pass. Healthways looks interesting. Modest uptrend sideways at the 50, a kahuna. Mobile breakout from a squeeze, everything's green above. Doesn't make money, but it is in healthcare cost containment. That might be one to take a look at. Lattice Semiconductor, a cheap semiconductor. Earnings slowing down. I don't think this thing's going to go anywhere. Aptar Group, Gartner. I'm looking for more of a trajectory up, and I don't see any of them here. So I move on to my next favorite view, which would be my PSAR reversal close at a squeeze. So I'm looking here for stocks that are squeezing that only have to move a few pennies to have a PSAR buy signal. So let's look at a couple. I'll show you what I mean. So you see the squeeze is on. It had a kahuna, which wasn't a requirement. It's right below the PSAR dot. It trades up 50%. Then Moody's becomes very interesting to me because we'll have a kahuna, mobile breakout, and a PSAR reversal. PPG Industries, I talked about housing. I'm going to go look at that before I say goodbye. Here is mostly green up above, pocket pivot and kahuna on Friday. They make paint and other chemicals that might be used in a housing scenario. Deluxe, I think these would be the checkbook makers, uptrend, squeezing, mobile breakout on Friday, pocket pivot on Friday on volume, move up through the PSAR, that becomes something else to take a look at. So you can see I'm looking for stocks here that are squeezing and close to a PSAR reversal. I might also go and look at high volume stocks, and obviously GoPro. Don't know much about Harvard Bioscience, but I know that biotech stuff have been popular. It's in a downtrend, although it had two kahunas and big volume coming in. Harvard Biosciences look like it wants to run, but not yet for me. So I look at volume buzz, 3X and 5X, trying to get an idea of which stocks had a lot of volume. There was a lot of volume on Friday. Don't usually see that many stocks. So I'm just going to close by pulling up a couple of home builders. And the charts don't look that good, I'll be honest. But a lot of these showed up on my scans this week. KBH was probably the best of them. And you can see it's had multiple pocket pivots, a kahuna, everything is green and it makes money. I didn't like as much Pulte nor Toll Brothers. This is UGI Corp. UGI Corp, that's not what I want. What is what I'm thinking of? Hold on a second. Oh, it's USG is what I want. US Gypsum, pullback hard, had a kahuna on Friday. Great earnings per share growth, trades at a multiple much smaller than earnings. Kind of interested in that one, perhaps. If home builders are truly turning around, you might see some, as Kramer calls it, pinball action, some of the others. Here is Terex Corporation, broke above the 50. Kahuna, pocket pivot, OBV is positive. This one looks intriguing to me as well. Again, if home building is truly stirring, you might see some pinball action in some of the affiliated with stocks. So on that note, this is in two parts because I had to stop it to find a piece. So apologize for that. Hope you all have a great week. Let's not forget that we are going into 4th of July weekend. So thanks to everybody that's been in the military. And you can see futures aren't doing much. Have a great week, safe week. Watch the market. It might be a little volatile after we get through the holiday. Is it summer rally or is it time to run? We'll have to see. See you all next week. Bye, everybody.